Want to just get some reaction. Welcome, everybody. Aaron, to you first. And let's start with what you heard Jamie Dimon say about the importance or lack thereof of Fitch's downgrading of the U.S. credit.
Yeah, no, look, I think he's right. I mean, credit rating agencies are overly relied on by investors, by government, by regulators. They're just folks offering opinions. This kind of comes out of left field, and I don't think has much value. Look, when I was at the Treasury Department in 2011, we got downgraded by S&P, and Treasuries rallied that same day. So I think Dimon's optimism about the economy was kind of my big takeaway.
Yeah. So we'll kind of circle back to that in a second. I just want to get, Chris, your reaction as well. Would there be implications from the downgrade that we're missing for instance, the major U.S. banks?
No, I don't think so. I kind of think that's noise and it's silly. It's, we're the world's reserve currency still. In effect, the Fed could always print more money. So, the risk of default is really not really there, in my opinion.
Well, so, Jimmy, I turn to you because, as I said, a very optimistic or upbeat, I guess I should say, discussion there with the major, probably the most important bank CEO in the country telling us the downgrade doesn't matter and so on. And not to, make too much of it, but, the markets are sinking to session lows as we speak here. So didn't quite get at least the immediate lift that some might have hoped.
Yeah. Well, first of all, I like the Jamie Dimon theory that if America's not AAA, then basically nobody should AAA since they all depend on us for everything. Their defense, the innovation. That's kind of an interesting point. But I think it's always a good time, whether it's from a rating agency or anybody else, to remind the American public and remind policymakers that we are on an unsustainable debt path and there is no plan from Democrats or Republicans to do anything about it. It's not fun. It's not as fun as talking about, an AI productivity boom or anything like that. But that's still the reality, and I'm glad Fitch reminded us. I hope other rating agencies remind us. I hope policymakers remind us.
Yeah, no, I'd rather the 3.5-day work week, the cancer-free, all of those sounded great to me.
I like Jamie Dimon, the futurist.
Yes,
that's great.
Yes, but Jimmy, I'm surprised to hear your level of concern because, frankly, there's not a lot of voices out there who are really taking this quite seriously. We did speak to Dan Clifton last hour, who was highlighting some of the dynamics you sound worried about. What's forefront in your mind?
I think the forefront of my mind is that that no one's interested in it. Listen, we're going to have the two probable presidential candidates have no interest in reforming Medicare and Social Security. It's just not even on the table. So there is no plan. And if we don't want to wait to the point where markets, not the ratings agencies, but when markets say, guess what, your time is up, then it really is up, because we've already should have had those plans in the works, and they're not in the works, and they're not even close. So we're going to have to wait until there's a market shock, I fear, before Washington really acts.
Aaron, you want to respond to that?
Yeah, look, I mean, the Republican Party has structurally become the party of tax cuts for every purpose. So the only plan the Republican Party has had really now, since the last fiscally responsible Republican president, which was Bush 41, has just been cutting taxes solves everything. And so there's a little bit of a harsh reality where you have a political situation where large majorities of the American public actually want wealthier people and corporations to pay their fair share. And you have one political party that's entrenched kind of over their dead body. And that makes it unsustainable. And you begin to understand where Fitch and other rating agencies come from. But the reality, and I thought Dimon was very strong on this, is the models have done a poor job of predicting where things would happen. The fact that the markets have taken the huge amount of debt that has been issued by this country for a long time with very, very low interest rates is not something that textbooks said would have happened 30 years ago.
And Jimmy, I'll just let you respond.
Yeah. What is the Biden entitlement reform plan? What is the Medicare reform plan? What is the Social Security reform plan? I think both parties have zero interest in it. Maybe that's because voters at the moment have zero interest in it. But this is a bipartisan abdication of responsibility.
All right.
Full stop.